Right, thanks everyone. Welcome. I mean, you have a very creative Dutchman, real Dutchman, not Afrikaner. We are open with the Dutchman. At Stellenbosch University, we could go into a whole different debate about Dutchman, but we won't. And we followed up by a South African in London who's talking about how crap banks are and all these sort of things. Now you get Barclays. Yay, lucky me, eh? The proper curveball. Charlie sitting up over there sent me a text message just now. He says, are you going to follow that oak? You know? Well, I can tell you I'm going to follow that oak. I'm going to put a woman in between and I'm going to come afterwards and talk some rubbish here as well. So let me give a background. My name is Paul Nel. That photograph that you see up there in my LinkedIn profile, and I apologize, I haven't updated my LinkedIn profile for all those who are going to bombard me and spam me. I'm not a chief of staff. For those who understand the American political system, a chief of staff is a person who makes the president look good behind the scenes. So if anyone else thinks a chief of staff is head of HR, okay, and I got a lot of, here's my CV, can I please get a job? So I no longer do chief of staff stuff. I actually changed my job title officially to chief of staff. So basically what my job was, I worked for Craig Bond, who's the CEO of Retail and Business Bank for Barclays Africa, and I was the chief of staff. So anything stuff came up, I had to deal with it. And part of the stuff that we had to do over the last 9 to 10 months is that we had a very interesting process where we interrogated ourselves as a bank. So let me just, sorry, beforehand, Barclays Africa Group is the Barclays brands of the bank across Africa. So we're in 12 countries across Africa. I won't mention them because I'll probably drop a few, so apologies to the Zimbabweans and the Egyptians who just have managed control over. And then also ABSA is part of the Barclays Africa Group from a brand perspective. So when I say Barclays Africa, it's also ABSA as well, but with brand migration and stuff like that. I was just talking to Kobus, he's noticed the way the size of brands are different in our marketing campaigns. There's some stuff happening around there as well. So I'm representing the Barclays Africa Group. So to tell a story, so what happened was our corporate investment banking colleagues and our retail and business banking guys got together, and through actually the inspiration of the Singularity University and exponential organizations, we as the executive of the retail and business bank, the old boys, I was the guy who brought down the average age of those guys, and I'm in my 40s, to give an indication. We sat down and went through a process of really looking at what is banking going to look like 10 years from now, okay? And then we thought, well, we're a bunch of old crappy oaks, we won't actually know, so let's get our Gen Ys included. Any Gen Ys here? Anyone of the Gen Ys? I didn't until recently. And we got our youngsters, really talented youngsters, to go through exactly the same process. And what we did there was we interrogated the world. We had to look at where we're going in terms of science, where we're going in medication, artificial intelligence, robotics, all this exciting stuff which Martijn was talking about. And it's actually bloody scary. It really is quite scary. What is religion going to impact? What is the economy going to look at? All these things. And we actually walked out of a 7-month process not talking about banking at all. And then we went through a consolidation. We sat down for 3 days and we said, right, what does this mean for banking? And to cut a very long and interesting story short, our Gen Ys and our old fuddy-duddies came up with a design which is effectively the same. We don't see banks being banks 10 years from now. Simple and straightforward as that. Okay, so anyone who wants to be in banking, I'm not chief of staff, head of HR. We're doing something different. So what I'm talking to you about here is not business as usual for a bank. What I'm talking about here is business as unusual. And this is something that we're attacking as a Barclays Africa, but it's also community. It's an industry-wide issue. We're not looking at it as a protective, and this is our brand and all these things, and we're going to be the only ones that do it. The simple reality is we have to collaborate. We have to partner because we can't do it ourselves. For those who understand banks and those who've worked for banks before, I've got my ex-Standard Bank colleagues sitting here. There's probably some FNB people around here. Capitec haven't quite made it, have they? No? All right. But what we're really trying to do here is that we're trying to fundamentally change the way things are done. And at the essence of this, we go back to a number called 325. Now, 325 is not a dollar fine that Barclays has to pay. It is not the number of customer complaints per day that I had to deal with. It's not the average monthly cost you have to pay for having an ABSA or Barclays account. It is the history of the bank. It's 325 years old. And the history of that, 325 years ago, one guy went to 2 bankers and shook their hand. Have you ever seen a handshake? Yeah, Kobus, give me a handshake. This is Barclays shaking. It's a snap scan. Everyone take a photograph? Okay, good, got it. Right. Okay. So what we're trying to do here is that we have an element of trust. Okay? We've built an element of trust. And that's what it comes down to. And in 2008, I was sharing with Cole earlier, banks broke the trust. This global recession, the mortgage issues, the Americans, not the British, the Americans, Americans, I'm joking. But trust was broken. And in order to get back into that space, you have to create the element of trust. And what is trust ultimately about 10 years from now? It's about your identification. It's about your secure ID, all right? And your secure ID is not your bank through last 3 months bank statements, and it's not about your ID book and all the potential fraud that can go with that, and we could stand here all day and talk about that because I'm a banker. Anyway, we won't go there. But it's about who you are. It's about your identity. And that's an evolving thing. There's the foundation, it's your DNA, all those millions of DVD data things that are there, all right? But what it's also about is how that evolves and how you capture that and how you move around with that, and how that creates the core of a financial services ecosystem around it. So 10 years from now, and I'm sharing some stuff which is, doesn't go as much more detail, but 10 years from now, if you have a Barclays stamp of approval, then Gareth has a Barclays stamp of approval. Okay, you won't, but anyway. You and I can transact because of the ecosystem. You have a red car. I have a blue car. I want your red car. You want a blue car. We swap. We hand over the keys. We drive away. The ecosystem takes care of the rest. And because I have a Barclays stamp of approval and a signed off approved identity, who I am, that transaction becomes real. And that transaction is based on value, perception of value, not currency. And the ecosystem around that, not only banks, everything around it, manages and drives that process. So that's the idea of our future. I only got 5 minutes, and I've already finished, sorry. Okay, well, that's the direction that we're going for strategically. So what does that mean for Barclays? What that actually means is that we have to fundamentally change the way we do things, fundamentally, okay? I can't be a banker today or tomorrow. So I'm not a banker. If you ask me what a term sheet is, it's probably a reminder how badly I did in school. You know, honestly, I don't know what a term sheet is. Someone gave me that idea. I didn't know what it is. I can scare you, but you have to give me all this banking stuff. But the simple reality is we in Barclays Africa have now, or Barclays actually, have undertaken a significant process to innovate, to disrupt ourselves. That's why I say business as unusual, not business as usual. So who's heard of the RISE Africa or RISE program? There's a program that's come out of Barclays. Globally, we're starting accelerator programs in New York, London, Tel Aviv. We've got our first one here in Cape Town. We've got a couple of guys from Cape Town sitting at the back there, of course, at the back, because no one likes to sit in the front, who are part of this program. And the RISE program for Barclays is just a physical space and a global community that is aimed to disrupt financial services technology. I know a lot of people, we just saw the signs up there, all these banks are doing it, et cetera, et cetera. I understand that. But so are we. But to us, we're not just going to be a logo on a pull-up banner. And that's the fundamental part of what Barclays Africa is committing ourselves to. We really want to go out of our way to help companies grow, to help companies understand what they can do. And what do these type of companies need? They need ideas, they need support, they need resources, they need capital, they need investment, they need partnerships, and they need scale. Okay, because this is a scale game at the end of the day. And if you don't get scale, you're not going to get anywhere. All right? And what Barclays is going to hopefully provide them is that scale. Because of our African footprint, because of our global footprint, because of our custom bases around the world, and because of this need to partner, to build something significantly different to what we have today, we will get to that point of partnership. We will get to that point of investment. So this RISE program is put there. We've got 10 companies in the current one, run by Tech Lab Africa. We've got Techstar starting. Applications are open for those who are interested. BarclaysAccelerator.com, punt, hit, marketing. You'll see a worse photograph of that one on the website. It's horrible. And what we're trying to do there is get companies on board that we can help get to a point of investment. Because the reality of the numbers that Nicole showed just now is that investment into your ventures, into your industry, into type of these technology things, not even technology, the way we employ, the way we engage, the way that we communicate, all these things is ridiculously small in South Africa and Africa, ridiculously small. I mean, those billions of numbers. I mean, I lived in China for 4 years. And whatever I found the definition of big, bigger, biggest was completely redefined by my experience of living in Beijing. I mean, the city the size of Cape Town is 20 million people. I mean, ICBC was my strategic partner because I used to work for Standard Bank. Sorry. All right, ICBC strategic partner. Their balance sheets were in trillions. I just lost comprehension of size. So when we look at these investments that venture capitals are putting into companies around the world, et cetera, it's billions of dollars, it's billions of dollars. We lose comprehension of size. We come to South Africa, it's hundreds of rands and hundreds of rands and thousands of rands. And we don't want to comprehend size. So we've got to be brave and comprehend size. So my job, not a chief of staff in Barclays Africa, is to actually break the bank that I work for. And my mandate is to do that. Now, of course, ExCo discussions are fascinating. As you can imagine, with an organization that is 75% functionally driven, and to go and say, guess what, we're not going to make money, we're going to give away banking for free. It just, yeah, you can imagine the reaction. Sort of the stunned silence you just gave me, but it's fine, But a bit of a shock, drop jaw. But this is the reality what we have to get to. So that's what we're doing from a RISE program. But how do you make that real? So I'm actually representing Warren Squires, who's the Chief Investment Officer of what we call the Barclays Seeker Fund. Now, the Seeker Fund is a specific fund that's put aside by our Global Investment Committee that is 100% dedicated to investing in technology companies. Okay. So where do we source those from? We're going to run them through our accelerator programs. Of the 10 companies, there might be some we want to take an investment in, there might be some that we don't. There are other hundreds of companies that are running out there. And the sexy ones and the ones that we see scale that A, number one, provide a solution for the challenges we face in Barclays Africa and financial services and in the industry, or B, is something that you can make a good return and make a material difference. That's why we're looking at health tech and agriculture tech as all the other options to it as well. It's something that we will potentially invest in, not for an equity investment to make profit. This is not a private equity thing. This is about real significant partnership. The investment is the rand or dollar-based issue, but then it's also about what you can do and how you can work together from a partnership perspective, because that's what it's all about. Because the reality is, if I rely on my own colleagues to deliver change, we will still be here and talking and talking and talking. For those who work for banks, understand that. And that's what the Seeker Fund is ultimately about. It's about making these investments, putting money where their mouth is real, not money where your points is, because that's also our new marketing campaign. Anyway, it's another pun for the company. Sorry, don't worry. I get paid to do this. And what we're trying to do there is really trying to find some sexy stuff. And one example I want to talk to you about, which is the other part of my job, is that we can be disrupted as a bank, or we can participate and collaborate with disruption. So you saw Prosper and Funding Circle logos pop up there. There's a company in South Africa called Rainfin. Now, Rainfin is a peer-to-peer lending marketplace, of which Barclays has a 49% equity stake. Okay. Now, this is where the scary part stuff. So you put your hand up and I run out of time. Okay. We have to put 49% in, they give the capital injection, grow, 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 and in walks legal and compliance. Okay? And the pause button's hit. Sean Emery, who's supposed to be here, but it's his birthday, happy birthday to Sean, he sold 49% of his company to Barclays Africa through the Seeker Fund. The deal was done. Well, they started talking about it in March 2013. The deal was signed in March 2014. We are now in October 2015, and we've been flat out for 2 months, September and October. So this is the harsh reality that we as an organization didn't approach the investments from a true partnership perspective. We invested, and then we let these guys dictate what happens. But these guys are the colleagues within the environment. It's the regulators. It's the policymakers. It's all these sort of issues which people are hamstrung about. So when you're doing fintech investment, when you're doing new ideas, when you've got the 500 million mobile payments, if you don't understand the simple reality of how the regulator and how all these other things impact you, what are the legal compliance? What can you say to your customers? Conduct risk, the most scary words I've ever heard in my life. Treating your customers fairly. All this stuff just puts a whole pause button on the progress of really making this investment, this innovation real. So what we're trying to do out of this program that we're trying to drive at the same time is make the partnership stuff real. So get the compliance people and the legal people involved, absolutely, because you have to do that. But do it in a partnership way. Do it in the spirit of partnership, not in the spirit of don't do anything because we're a bank. It's like, who's applied for a loan lately? What's the immediate answer? No. Prove it? No. What is it? No. No. Okay, you can get some money eventually. We've got to break this mindset of no. And to break the mindset of no, we've got to disrupt and break the way that we work as a bank as well. So you talk about disruption, it's about disrupting ourselves as well. So the simple reality of Rainfin, which I'm seconded to Rainfin at the same time to help commercialize the opportunity, the other part of my job, is that this is a peer-to-peer lending marketplace that is live and real today. There's borrowers, there's lenders, that's investing, it's growing, they're writing new loans every single day, and there's a lot of interest. We want to make an African platform. And why are we doing it? Because there's scale. Why is Barclays a partner? Because there's scale. Because if you just go from a traditional origination perspective, virtual rainfin.com, you go on and you apply and you fill in your documents. It's a virtual loan application process, all online, etc. It works wonderfully well. You can register, another punt. But if you don't have an alternative origination strategy, you're not going to get that scale that was there. That's why Barclays is a strategic partner for them, because they can get that scale. Because the simple reality, I don't care what anyone else says, branches, ATMs, call centers, and digital are the 4 channels in financial services that will be there forever. The branch might not look like the branch of today, okay? But the physical environment, The place where people can have a conversation, a face-to-face conversation, will still be the real thing. Why? Because it touches the appeal to the human heart and the human mind. I'm no or tech excellent, I'm sorry, okay? I can't talk to my daughter. I have to WhatsApp her. I phone her, she won't answer. I WhatsApp her, she replies immediately. Okay? I struggled with that. But now I've gotten over it because that's the way that they engage. So this younger generation is a different way of doing things. And you've got Tannie Gerde, I think her name is. She owns like a multitude of farms in the Eastern Free State. She goes into the ABSA branch every single Thursday, and you get to the middle of nowhere and you turn left, that branch, okay? And she goes there, and she sits and talking to teller, Mari, for 3 hours. And the branch managers get crapped on because the turnaround time in the branch is not quick enough. But that 3 hours of conversation that Tannie has with Mari is worth 400 million rand in assets to the bank. How do you justify that through change in technology? So what I'm saying to you is that you still have to get that firm balance. You still have to get that. Change comes at a cost. Change comes at a convenience. But at the end of the day, in anything financial service, anything that you guys are doing, it's all about the human being. It's all about the decisions. It's all about the choices that you have to make. And we as a bank won't be able to do that ourselves. We have to go through a strategic partnership side of things. So let me just go back to Rainfin. Why is peer-to-peer lending marketplace exciting and potentially disruptive, and why we need to be strategic partners? 3 years ago, I think it was, that industry was worth $0. Today, it's $25 billion. In 2020, it's going to be between $350 and $500 billion, depending on research house you chase. And why is that? That's not because of a desire for people to get more personal loans. It's because there's a huge amount of institutional capital looking for alternative investments. Buying equities and having a 35% decline in Glencore is no longer exciting to these capital guys. Property is a bubble about to burst. All these different scenarios. People want access to debt. Institutional investment want access to debt. And this is why these industries are very exciting. So we can pretend to play in them or pretend to knock them down, or we could partner and we could make them happen. So to conclude, just at the end of the day, Barclays Africa Group is going to do the traditional stuff for a while. So you are going to struggle to get your personal loan and get your home loan financed, and we will probably have some costs that are associated with bank accounting. I'm sorry. But our vision is different to what we do today. And in order to get there, we have to do it quicker and with help, with partners. And this is why your community is so important to us, because we will find in between all of this real strategic stuff that can help us change the experience of our customers and change the experience of our colleagues and change the experience of our partners fundamentally. And that's not just talk, that is real strategic partnership with or without investment, all about the product, all about the customer, and all about satisfying everything other. At the end of the day, our business model has changed. In the last 6 months, from a business perspective, we've gone from traditionally product silo-driven, here's your home loan, here's your VAF, here's your payment, all these things, to saying we're a customer needs-led organization that has centers of excellence solutioned, and we locally owned and executed. We're making decisions about the customer closer to the customer, and it's about the choice of the customer. If someone wants to go into a branch and play on the app in the branch because there's free Wi-Fi, let them do so. Don't punish them at all. So any questions? No, that's good. Right, perfect.